Hey everybody, August 8th, Scott Riley, the market update desk, NMLS number 157524. 616-293-2189 is our direct number. Wanted to break down what's going on today. We're still seeing the Dow's up a lot today, but we are still seeing big variations in movements between these resistance levels in the Dow, Nas, S&P, mortgage-backed securities, and 10-year Treasury. It's kind of interesting when you look at all these forces that are currently at play. So stocks tried to mount a comeback yesterday, but just as the day before, they sold off at close. They are once again trying to start the day in the green. Bonds are starting the day in the red, unfortunately, lower. Now the Dow is up. I'm just looking at about 400 points. So these big whipsaws going on. Yesterday's 10-year auction. Now we thought it might get a lot more play and be pretty positive because we thought a lot of investors, institutions were going to want to lock in that higher yield. Now, surprisingly, it did not go that way. Now, this did cause the yield to rise with them now testing on the 10-year 4%. The big question is going to be what side of 4% are we going to end up on at the end of the day today, above or below? The big item today that is going to be the benchmark on where we're going to go with the 10-year is a brand new 30-year auction, which, like I said, it's going to be impactful to all the different markets. Now, the potential good thing is the 30-year doesn't always sync up with the performance of the 10-year. And last month's 30-year auction was extremely strong. And that's one of the items that led to some better rates that we saw on this most recent cycle. If we're lucky, we're going to get positive results from that 30-year auction. Now, ZipRecruiter earnings call. Peter Bookfar spoke with CEO of ZipRecruiter, Ian Siegel. Ian said that the labor market's conditions are continuing to be challenged, and he said that year over year, seasonally adjusted hires have declined every month since 2002. What does that mean? It means we're seeing a steady weakness in the labor market. We've talked about this on the show with the labor being the big factor that's out there for what the Fed's looking at and what the bond market is looking at. Also mentioned that the quit rate, a very important factor to follow, is 9% below the 2019 average of 2.1%, which is also the weakest level since about 2018 when you bracket out COVID. This shows that there's less poaching of competition for employees from one company to another company, which reduces wage growth because employers are not having to pay up for that talent. Lastly, Ian explained that year-over-year decreases in quarterly paid employees is reflected in that reduced demand in small business. And remember, the ADP most likely is giving us a truer picture of what small business job growth or declines are compared to what the BLS is because of that birth and death model. The other item that came out today was jobless claims. We're on Thursday, so it's jobless claims day. So the initial claims fell 17,000 to 233,000. Now that's coming off the highest level in a year of what we had the week before. Continuing claims, though, is another story. That rose again by 6,000 to 1.88 million, highest level in almost 3 years. Once again, the figure is very likely, we would say, understated as well, because people that went on benefits 6 to 9 months ago are now falling off the unemployment rolls because their benefits are expiring. There's really only two ways to fall off the continuing claims roll. One is you get hired from a new employer, or your benefits have expired. So likely these continuing claims are slightly understated, which is kind of an interesting thing, considering how high those are. 10-year bonds, like we talked about at the beginning, is testing this very important psychological and technical level at 4%. If 4% is broken, Really, the next resistance level is about 4.13. Let's see where we go today. We're definitely hoping that 30-year auction gives us a little bit of juice towards the end of the day to help the bond market. Give us a call. We'll help explain all this. 616-293-2189. The Market Update Desk, your original singular market news source for West Michigan. Have a great afternoon.